Trump Media and Technology Group, and is this going to be the next big pump and dump? And for you to really kind of understand this video in a little bit more context, have a little bit of better understanding, you probably want to go research what a SPAC deal is. And I did a video on SPACs, I want to say sometime last year, and that video should be able to be found here at the annotation above this particular video. So you should see it in the annotated link. Then also, I want you to go research pipe investors and what that means. So you should go research SPACs, watch the video, research pipe investors, and then it can give you a better understanding of what we're going to talk about in this video. Because what we're probably not going to talk about a lot is whether or not this business should be created. We're going to go a little bit into that. However, what I want you to really understand is that there's an opportunity here once you understand how these deals are constructed and why they're constructed, and how you can put yourself in a position to be profitable, and maybe not in this deal, but in future deals, because all of these deals are set up the same way. There is no difference. And so the person at the front of the deal doesn't change the structure of the deal. And one of the things you understand about deals is that when you understand the structure of the deal, then you have a better understanding of how to position yourself in the deal to be successful. And there's more than one way to position yourself in this deal than what the mainstream is going to tell you, right? So what the mainstream YouTube is going to tell you is just buy the stock or maybe even buy the warrants. But there's a lot of multiple ways to be successful and profitable in this deal, based on my opinion, than just doing those two things. Now, this is not investment advice. This is just my own opinion. However, I've spent a lot of time researching these type of structured deals, and I've also taught this to other people, and they've been able to be successful understanding, right, how this deal is set up and how this deal is structured. So let's go ahead and get into it. Okay, so what we have is a SPAC deal. Now, what a SPAC deal is, really quickly, is really a way for one organization or one business to merge or either buy another business, and the goal is to get a yield on capital. That's really basic what it is. There's nothing special about it. It's just a name on aggregating capital to get a return on capital. That's it. Now, there's a lot of legal things behind it. You got to meet certain SEC regulations, but the goal of a SPAC deal is to aggregate capital, acquire or merge with another company that's going to be the vehicle that we're going to use to seek out the return on capital, go public, and get a return on capital. That's the goal of the deal. We also, if you understand me, we talked about IPOs, or people taking companies directly public, and who that really benefits. And it's not designed to benefit the public, right? IPOs are exit events. They're not entry events. They're exit events. People are going IPO to exit. They're not going IPO because they want to help make you rich by going IPO. They're going into the public market so they can exit at a return that's going to be higher than what they bought into the deal. So that's what it is. So DWAC, I think, is Digital World Acquisition Corporation, and Trump Media and Technology Group, right, are either going to do a SPAC deal where one is going to purchase the other, is going to acquire the other, or they're going to merge. It doesn't matter, because the structure of the deal and the goal of the deal is the same, right? Now, Trump Media and Technology Group is a organization, I believe it's founded by Trump. He's the face of it, though. And the goal is to essentially, from my understanding, and they have, and I may link their, I want to call it the media kit, but I think it's called, I forgot what the name is called. It's like a media content that will kind of explain what their company called Pitch Deck. I think their pitch deck, and I'll probably link their pitch deck, is really what they're doing is they're trying to enter into the media space that's going to be an alternative to a lot of the mainstream media platforms. And what they're trying to do based on their presentation is go after what we would call the conservative audience. Now, I could do like 5 or 6 videos on whether or not I think that's a good idea. And one of the things that you see with a lot of these alternative media platforms is that the conservative media people need the mainstream. Well, why do they need the mainstream? Because they need the people that don't like their message just as much as they need the people that like their message. If they just get into a place where everybody just agrees with them, they don't have the same attraction because they're no longer polarizing. Therefore, a lot of the really big prominent people on the conservative side of conservative media, they're only important because they can polarize people. If everybody agrees with you and you can't polarize anybody, well, then you're no longer important in the same capacity. It's different than a pastor where everybody shows up at church because they want to see the pastor talk, right? So nobody's showing up at church because they don't want to see the pastor. They're showing up at church because they agree with what the pastor says and they want to see the pastor talk. And I think that's something that a lot of people really don't understand when we kind of create this narrative that, well, conservative voices need an alternative platform, when a lot of them have made their money and they created their appeal around being controversial. Well, you're not controversial if everybody agrees with you. There's no controversy there because we all agree with you, right? And I think that's why a lot of times these plays really don't work, is because the heavy hitters and the people that have the big names in online media, they never go to these alternative platforms. They say they need it, but they never leave, right? You never see the top people in the conservative media say, okay, you know what? We're going to leave YouTube. We're going to leave Twitter. We're going to leave Facebook. We're going to leave, I don't know, maybe Instagram. I don't know, TikTok. We're going to leave and go to this alternative platform where everybody agrees with what I got to say. Well, that doesn't work because they have to be polarizing. And you can't polarize people if everybody agrees with you unless you go there and then you move even farther to the extreme, similar to maybe like a Michelle Malkin. That's probably the only way that it works. And then you're dealing with such a small audience because these particular platforms are going to have a much smaller audience than a Twitter or a YouTube or a Facebook. So it sounds really good to polarize your audience, saying that we need to create an alternative platform. But in reality, I need the mainstream platforms to justify my existence, to justify my sponsorship deals, to justify, my revenue, yada, yada, yada. But it sounds good. So I see why they say it. Okay, so the Trump Media and Technology Group, they want to be an alternative to Twitter and Facebook. Now, we see Facebook has 1.9 billion daily active users. They're doing 15 million potential monetizable users. 211 average daily active users that can be monetized, right? They're still dealing with 15 million, and their numbers have dropped off since they released this pitch deck. Now the real money maker behind this is supposed to be the streaming platforms. So they're saying that they're going to go into the streaming space, and I guess they're going to put out conservative or alternative based media on the streaming side. Their competitors are going to be Netflix, Disney, iHeartMedia, right? Like I said before, I just think this is going to be very difficult to be successful at because the big heavy hitters have to go into this space. Now with the streaming, it could work, right? And we're going to kind of talk about what may have to happen for that to work. But the social side, I don't see it happening. And that's just my personal opinion. I could be 100% wrong. The reason why this kind of play can have a lot of legs is because of Trump being the face of it and him having such a big audience and him being able to attract a lot of attention to a lot of things. However, once we get past that, now we start looking at the stock. And like I said, when we look at the structure of the deal, so all of this that you see on the front has nothing to do with how the deal structured. So I'm gonna repeat myself. All of this on the front has nothing to do with how the deal structured. So what they want to do is get retail caught up in this, right? Because why would we want you to look at the structure of the deal? And what we do over here at Stock Market Sharks is we look at how deals are structured. Because how the deal is structured is the direction that the play is going to go. Got nothing else to do with it. So, because I know that people are going to hype this because they think their audience wants to hear it, but it doesn't change the structure of the deal. Therefore, if you want to deal more with the structure of the deal as opposed to the hype, then you can keep listening. If you just want to go back and forth over whether or not this is going to work, yada, 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 you can have that argument with that group of people because I'm not here to argue that because I don't care if this works or not. I'm here to try to figure out how to get profit out of this thing, right? So let's go into the shares, right? So let's look at the stock. We see some of y'all might remember the big run up, right? Ran up, sold off, traded, consolidated for a good period of time. Now sold off a little bit here earlier this month, and now we're around $63 at April 3rd, 2022. Now the issue is that Trump Media Group, if that's the name of them properly, so I'm sorry, Trump Media and Technology Group and DWAC have to merge, right? That's supposed to take place, late this quarter. But we know it's going to take place in 2022. They had some SEC investigations. That shouldn't be a problem because the SEC pretty much rubber stamps everything. Okay, so once they get past this SEC investigation, they should merge. Now, here's some of the things in which we're going to start talking about the stock. Historically, when you look at a SPAC deal, and there's a lot of hype around a merger, what you normally see is a stock runs up pre-merger. Then once it merges, you usually see a sell-off. That's without any of the controversy and any other thing around it. That's just with a regular meat and potatoes vanilla SPAC deal. You get a lot of hype around the merger, right? Then as soon as they merge, stock price a lot of times sells off because it's a sell the news event. A lot of times it's a buy the rumor, sell the news event. Okay, and that's a lot of times what you see happen. However, the way this deal is structured is really, really interesting. And the reason why this deal is structured the way it's structured is because it's designed for all the initial investors, the early investors, the pipe investors to be easily have the ability to liquidate their position through the public markets. That's how the deal's structured. Whether you like Trump, you love Trump, whatever, it has nothing to do with the structure of the deal. So one of the ways in which you can become really successful in these markets is you get rid of having an affinity for anything except making money, right? The guy for Rivian's a Floridian. I want him to be as successful as a Floridian. It doesn't mean I'm not going to short his company, right? Just like if I play somebody in sports and we could be from the same neighborhood, it don't mean I'm not going to try to beat you. That's just how this works. So one of the ways in which you can make a lot of money in this market is if you get rid of your affinity for a situation, stopping you from making money. Now, it doesn't mean that you got to violate your morals, your principles, but I don't have any morality issues, right, with this particular play. And just what I want you to understand is that this is going to get hyped up as a play for conservative media. It's going to get hyped up as a play because people like Trump, yada, yada, yada. And what that's going to allow the pipe investors and the initial investors to exit through the public markets with a lot of liquidity. That's what's going to happen. And I'm going to kind of show you what I'm talking about in this particular deal, right? So here's an article about from the street. So the ugly truth about Trump media acquirers digital world shares. Okay, really quickly, Trump media unveiled its Twitter clone called Truth Social, and that's what it's supposed to be. It's supposed to be an alternative to Twitter because a lot of the conservative people talk about, we keep getting banned on Twitter, yada, yada, yada. That's weird to me because, you can do XXX porn on Twitter. So I don't understand what the issue is, but, some people, and one thing I noticed about social media is you have people, they're very childlike to where they will throw rocks at ice until the ice breaks and then complain that people are yelling at me because I broke the ice, but you just kept throwing rocks at the ice. A lot of people go on social media and I just think they want to see how far can I push how far can I push this before they push back at me. And then when they get pushed back at, then they say, okay, well, you're against me and my position. But, a lot of people use social media as a way to say stuff they would never say to people in real life. And so then you create this narrative that, well, we got to have our own place to do our own thing. So now the marketplace creates this demand for that, right? But like I said, that you need the biggest faces in that space to move over there, and they're not going to go over there because the audience is not there. They're going to say it on their social media platforms that we need it, but they're not going to go over there because they need an audience for them to be successful, right? The only way you make it in entertainment is you got to have an audience, all right? And entertainers are a lot of times judged by the size of audience if they're playing that kind of game. Therefore, they don't really want to go somewhere where the size of the audience doesn't justify them being over there, right? But they're going to do this Twitter clone called Truth Social, and we kind of talked about that. And I understand. If Trump won't be allowed on social media and he has an audience, it makes sense for him to create a social media platform. And then if he can get people to invest in what he's creating and he can be profitable, there's nothing illegal about that, right? There's nothing illegal about that, right? Because you have a right to buy or not buy. So I'm all for it. Okay. Now, what I want people to understand is that investors in the pipe have agreed to buy $1 billion in DWAC shares, free to sell immediately when the deal closes, and the deal is the merger, right? These pipe deals hand these preferred investors a minimum of 40% discount to the market price with no lockup agreement. Now, people that, inside my community, and they've taken the IPO lockup course, which is extremely underpriced based on its value, understand what a lockup agreement is and how that impacts. So this ought to give pause to any buyer of a free trading stock, right? Then there's an SEC probe of possible violations in connection to consummating the deal. I don't think the SEC is going to find anything. SEC pretty much rubber stamps everything. Okay. And I think that them going through the SEC probe and not finding anything wrong is going to allow retail to get a lot more confidence in this deal. So when and if the deal closes, a significant amount of shares will be free to sell within a cost basis far below the current price. Yet investors are buying into nothing more than a hope and celebrity appeal, a bad combination is overvalued, and froth are mercilessly rooted out in this market, right? Now that's his opinion, but the structure of the deal is not his opinion. And what we mean by that is that in these type of SPAC deals, people are allowed to buy in at a very, very low price. The goal is to take this thing public, run the price up, and allow those people to exit. Right? And many times in SPAC deals, pipe investors usually buy in under $15. Right? Now, there's no lockup on this. And what we're finding is that as soon as this thing goes public, they have the ability to get out. So normally what you have is a scenario where the company goes public and there's a certain amount of time in which they have to allow trading before the initial investors can leave. And it's designed to keep pump and dumps from happening. In this deal, that's not the structure of the deal. So if the SEC rubber stamps this, it's good to go. Let's go into the next article. Don't want to do that one. Okay, so a Digital World acquisition SPAC merger can be Trump's biggest deal ever. Okay, so this is from March 3rd. Has an outstanding 18.4 billion market capitalization on a pro forma basis. And that's because DWAC stock went up to 95.15. Now it's way under that now, so his market cap is a lot smaller. The problem is DWAC has a market cap that's bigger than a lot of its contemporary social media platforms, even though they don't have the audience there, right? So it's called a slide deck. My bad, I call it a pitch deck. Now, what I want people to understand is that that they're going to have 193.4 million shares outstanding. That's before the warrants. Then if they multiply that 95 by 193, we get a pro market cap of 18.4. So what I would do now is multiply the 193 by like $65 and you figure out what the market cap is. Once we include the warrants, right, the shares could exceed 200 million. Now, people that understand the markets understand what it means when I say the float keeps increasing, right? So the float will continue to increase. Now, what does that mean if you buy into it? It means you're going to get diluted. So the value of what you bought, as far as the actual equity value, is going to be less as the shares increase. And as more shares get brought into the market, your equity position based on dilution is going to continue to get lower and lower, right? And so that's what you want to understand before you buy into these type of deals, right? I think that's it. Let me go to this article because this is what I want you to understand. This is from Forbes. So we talk about the deal. So in September 2021, DWAC conducted its IPO by selling 30 million units to 11 investors at $10 per unit. Okay, so they got in at $10. Now the stock is way over $10 now. Okay, so we got 30 million units to 11 institutional investors, right? At $10 per unit. At this time of this article, the SPAC was trading at $70 a share. It's about $10 lower than that, maybe $5 to $10 lower than that. So for the original IPO investors, the SPAC has been a great deal, earning them at least a 500% return. Okay. Now, on 2021, October, they got their deal with Trump Media, valuing Trump Media at a minimum of 87.5 million for a company that's not operational. So when you buy another company, you set the valuation of the company based on what you're willing to buy for. So when DWAC merges and they're merging with it, we set the valuation of Trump Media, right? But it's not even an operational company. So what value do they have? What assets do they own that makes them have any value? So do they own any physical real estate? Do they own any equipment? Do they own any intellectual property? What is their value set on? Well, it's set on what you're willing to pay for it, right? Or is it just set on the fact that Trump's name is in the deal? So his brand value may have it set at $855 million. I'm sorry, 875. So Trump Media shareholders will receive up to 127 million shares plus 1.2 billion in working capital, right? So at current share price, the market is valuing the merged entity at over $10 billion. So a $10 billion merger for a company that doesn't have any operations at all, right? So then in December 2021, DWAC raised an additional $1 billion via a private offering known as a PIPE. So we talked about before, private investment in public entity. These PIPE investors have forward agreements to invest $1 billion in convertible shares in listed Trump media as part of the merger closing. Now, I want you to follow this now. The number of common shares they can convert is based on the value weighted, what you call VWAP, over the 10 days after the closing, known as the VWAP period. Now, there's a company called Snow, that's a software company that has something very similar in their deal, right? So I've seen this before. The lower the VWAP, the more shares allocated. All right, now we got the particular SEC deal, which is, like I said, it's not a big deal to me. Now, possible DWAC Trump media price movements. To form conjectures about future price movements, we need to distinguish among the three groups of investors: the current investors, the PIPE investors, and the shareholders of Trump media. The current investors with long positions would like the price to increase as much as possible. Speculators who have short positions, of course, want the price to fall. PIPE shareholders want it to fall during the VWAP period, so they'll be allocated more shares. And Trump media shareholders want the price to rise after the merger, so they can also be allocated more shares. Starting with the motivations of the PIPE investors, it is clear they want the price during this VWAP period to decline at least $16.67 to get the maximum allocation of the 100 million shares. That way, the PIPE investors can potentially dump 30 million or more shares, right? The PIPE investors can potentially dump 30 or more shares on the market during the VWAP period to achieve their goal. What does that mean? It means the PIPE investors, right, can short this stock. They also can dump shares into the market because they're not under any kind of regulations, right? So because they're not under any restrictions as PIPE investors, which normally they are in SPACs, they can manipulate this stock. And I don't mean manipulation as a negative term. What I mean is that they can manipulate this stock to whatever means available to them to get the result that they want. They're not restricted from any activity. The PIPE investors can also short at any price above $36.60 during the VWAP period. So it's logical to expect the price to be pushed down during the VWAP period as close as possible to 16.67. Okay? And what you want to understand is that after this thing merges, one, there's no lockup period. Two, the PIPE investors have an incentive to try to push this price down so they can get the price that they desire. Next thing I want you to understand. This company, once it merges, how will it raise more capital? Because if they're going to do this, right, if they're going to compete, one, with the major players in the social media space, two, if they're going to compete as a social media platform, not a social media platform, as a streaming platform, well, Trump Media Technology Group, that might be it. Is it that? Okay. They don't have any operations. Okay. DWAC, Digital Word Acquisition Corporation, if you look at their statistics, they got like $1 million in the bank. They got cash of $1.49 million. There's nothing else there, right? So this is just a shell company, okay? They're going to have to raise capital to do anything, which means that any additional shareholders will continue to get diluted. So they have the ability to dilute you right after the merger. You can get diluted, and I want to show you this right here. They can dilute you after the merger. Okay, pro forma ownership. So we got public stockholders, sponsors, TMTG stockholders, PIPE investors, put total shares around 224, right? Or 193, whichever one you want to look at. Okay, then we take this thing public, but for us to accomplish this, right, well, we're going to essentially roll this thing out the way we want to roll it out. Most likely we're going to do some more dilutions. Because, like I said, we can't do senior offerings because we don't have anything to use as collateral. We can't sell a bond because we don't have anything that's going to generate a yield, right? Because how are we going to create a yield if we don't have the revenues? Then we'll be taking the small amount of revenues we have and we'll be using it to pay back bondholders. You can't get a zero coupon bond in this market now because the interest rate is going up. So nobody's going to take a zero coupon bond from them when I can get a yield from somebody else. It doesn't make any sense. They may be able to do a convertible bond, right? Maybe a zero coupon convertible bond, maybe. But why would I want a convertible bond if I don't believe that the price is going to keep going up? Most likely what they're going to do is they're going to issue out more shares to do some type of offering, right? Which means that the people that are in the deal are going to get diluted. So this is my analysis of this. This is not investment advice. They're going to create a merger. It's going to sell off. They're going to flood the market with shares. Everybody's going to hit the door trying to get out. Once we get around midterms, it's going to create a lot of energy around this ticker, which is like around November. Create a lot of energy. The price should go back up, right? Because this is the place where everybody's going to talk now around midterms. And I think once we get out of midterms, I think this thing will pretty much be over. Now, whether they do the equity raise before or after midterms, because they got to get somebody to believe in this deal to do another offer. I don't know who else believes in this deal. So what I think is happening is they're going to do the merger. It'll probably sell off. Then they got to try to figure out how to create legs for it, right? They get it to midterms. You'll probably get a lot of energy around it. And then after midterms is over, that'll probably be it for this. Now, when you have some business activity going on, yes. But the issue again, Trump Media Technology Group does not have any operations at this time. It's going to be a publicly traded company. Every 90 days, they got to report earnings. What are they going to report on? Right? The social media platform is losing viewers. Right? It's losing subscribers or whatever you want to call it. There's not a lot of activity on the platform. They probably will get some activity around midterms. However, we talked about before, the heavy hitters in that space outside of Trump's the one heavy hitter. But outside of the heavy hitters in that space, they need those people on the platform to drive the rest of the people to the platform. They don't want to be on that platform because there's no audience there. They need to be somewhere where they can polarize people. You can't polarize people in a place where everybody agrees with you. There's no polarization. Unless you're going to go even farther to the right, like Michelle Malkin, right? And that's the issue with these type of plays. But outside of the business model, looking at the stock, this is an exit event. It's a dilution event. And you have to understand is that because you didn't get in early, you got to ask yourself, do you want to pay these prices? Now, at 63.25, when I probably think by this time next year, this probably will be trading under $10. That's my analysis of the ticker, not investment advice. This time this year, this ticker would be probably trading under $10. Therefore, I don't know, look at their volume. So their volume is decent, real decent. If you get in at 63.18, you'll probably be underwater, by, I don't know, a lot. I don't want to give you a percentage by this time next year. Hoping that they can figure this thing out if you really believe they're genuine about trying to figure this out. And that's why I think this is just a pump and dump deal. Got nothing to do with Trump. Got nothing to do with conservative media, has everything to do with SPACs, the intent of a SPAC, and how this deal is structured. Anytime you go into a deal and you're buying in retail and everybody else bought in before you, right? And they're able to get in 50 to 60% lower than you. And then as you're coming in, they can leave. That's always a bad deal for you, right? What I would encourage anybody to do in any SPAC or IPO is wait, see if the particular business can establish some credibility in the market. Because if you believe this thing is continuing to go up, buying at 150, because I believe it's going to be 500 in 3 years, is a great deal. However, the desire to, be part of the crowd, to be a activist investor just as a buyer, but not as an operator, right? So, I buy the stock because I believe in what the company's doing, but then I don't really try to exert any influence as a shareholder. I just champion the company on social media. I don't think that's good investment strategy, right? So I can believe in conservative media, right? And then want to support it. But if I buy into this deal, how do I exert that as a shareholder as opposed to just championing on social media? Now, if you just want to buy a share just because that's going to make you happy, that's cool. But just understand, it's very likely you get diluted because you're buying a company that is pre-revenue. Trump Media Technology Group is not operational. They're pre-revenue. DWAC seems to just be a shell company. So what are you really buying? They don't have any operations. So there's no revenue being driven through the company. So then they got to find themselves in the market. And I'm never a fan of investing in a company that has not found themselves in the market yet. If they were distressed and restructuring, that's a different deal, because they have a space in the market, like Hertz. Hertz actually has business activity going on. They just had to restructure the deal, right? But these companies that have no business activity at all, they're just shells, and they're telling you, well, this is what we could do in the future if everything goes our way. You got to kind of ask yourself, is that a good place to put your capital? And on top of that, they're going to get diluted. I guarantee you that if everything else goes right, they still going to probably get diluted. Why? Because they got to raise money, right? And the only way they do that is probably to sell some shares. So that's going to be the particular topic. I want to really encourage you to go off on your own and research some of these yourself. Hope this particular explanation wasn't a little bit too all over the place. I know we jumped in a lot of different articles, but I just wanted to give you some insight on this type of setup. And like I said, is that you can transfer this to multiple companies over and over again. It really doesn't matter. The players are really not important. The companies are really not important. It's really how these deals are structured. Once you understand that, you pretty much understand the direction of the stock over time. David W. Williams, also known as Diamond Dave. Talk to you later.